Hello and welcome to the progress. I am Aravinda Rajan, and in today's session we are going to study the regional rural banks or RRBs. As a part of commercial banks, we completed public sector banks, PSBs, private sector bank, and the foreign private banks. And as a continuation to this, today we are going to study about the regional rural bank. So, what is the necessity of the regional rural bank? First of all, what is regional rural bank? As you all know this, after the independence, the private banks has been nationalized or governmentized because private banks can't cater or can't serve the rural area. So financial exclusion has been taking place. To include them also into the banking system, to bring the financial inclusion only, the private banks has been nationalized in 1969 or 1980s like this. But the banks has been governmentized to provide the banking service to this rural area and underserved area. But even after creating the PSB, even after a lot of years, the rural sector or rural area has been left out from the formal banking sector. Because of the many rules with respect to the collateral or with respect to the other condition, the rural people can't claim any benefit because the private public sector bank can't made any tailor-made plan for the rural consumers. So by keeping all this in the mind, in the 1976, the P. Narasimhan Committee has been recommended formation of separate government bank known as the Regional Rural Bank. It is also a government bank. It has been formed separately based on the recommendation of the Narasimhan Committee during 1979. And to achieve the purpose of financial inclusion and to include the rural sector also into the banking sector, this RRB has been introduced. And this RRB generally operate within that district or within that area only. Like commercial bank, like SBI or the Indian bank, which is having branches in Chennai or Mumbai, Delhi, Calcutta, wherever it is having branch. Even inside Tamil Nadu, if it is having large amount of branches, means with respect to the RRB, it is restricted to one country, one or two, or group of contagious area, or only with respect to some district. It won't be having a widespread presence. And how this RRB has been composed, or how this RRB formed means, out of this RRB, 50 percentage of the ownership lies with the central government, and 35 percentage of the ownership lies with the sponsoring bank, and 15 percentage of the ownership lies with the state government. Suppose if there is one RRB, let's say ABC is a RRB means, then in this ABC, if suppose SBI wants to sponsor this bank, like this SBI is approaching means, the government will give the discount that okay, you don't need to do this alone because you have to face lot of losses. So what I will take 50 percentage of the ownership of this ABC bank, and state government will take 15 percentage of the ownership, and you are the sponsoring bank, so you take 35 percentage of the ownership. Not only SBI, any bank can sponsor the RRB. Whatever bank sponsoring, the ownership of the sponsoring banks will be restricted to 35 percentage, and ownership of the central government is 50 percentage, and ownership of the state government. Suppose if it is opening in, let's say Karnataka means, the Karnataka state government's ownership will be restricted to 15 percentage. So this is the RRB. And how this RRB has been guided means, this RRBs are regulated by the RBI. Apart from the RBI, there is one more bank, that is NABARD. When we are studying about the development banks, we will study about the NABARD. As of now, consider NABARD is one more bank, that is a development bank. Apart from the RBI, this NABARD is also a bank which is having a supervisory power over this RRB. NABARD is a bank generally works in the area of rural or agricultural sector. So, and NABARD is an apex agency with respect to the rural and agricultural sectors. So, apart from the RBI, who is a general regulator, apart from the RBI, NABARD will also be having certain supervisory power with respect to the regional rural bank, because RRB is operating in a rural domain. If you are saying that PSBs are there, private sector bank are there, foreign private bank is there, and then your RRB is there. Out of all this, in other three groupings, the NABARD is not having any supervisory power. Only with respect to the regional rural bank, NABARD is having the supervisory power, because most of the lending capacity of the NABARD of the RRB is coming from the NABARD. But what happened means after certain time, the RRB has been running successfully and opened many branches. But after certain time, it started lending to many rural consumers and it started facing losses. Therefore, NPS started mounting up like anything. After some time, what is happening means it is facing 75% of the RRBs. Suppose 100 RRBs have been opened means out of this 75 are running in the loss. Only 25 are running in the profit or running properly. Therefore, many of them are running in the loss. So the government studied the functioning of the RRB and came up with the conclusion. And this RRB has been studied with the help of the person known as Kelkar. Kelkar is a chairman, and the Kelkar committee has been formed to study the RRB. And the Kelkar committee recommended that don't open further RRB. Try to close the RRB or strengthen the RRB by merging or giving more autonomy or by giving more power. Strengthen the RRB but don't open further branches. Like this, Kelkar recommended. And even in the 1990s, committees headed by Bandari and Basu also recommended we should strengthen the existing RRB and we should restructure the RRB in such a way that they are given more power and they are given more administrative knowledge and expertise has been given to the bank so that loss has been reduced. So, based on this recommendation, the RBI reduced the total number of RRB operating from more number to less than 40. So currently the number of RRBs was been less than 40. Initially the RRBs were very more, but based on the Kelkar committee, the RRB size has been reduced. Even the existing RRB, it has been strengthened based on the Bandari and Basu committee. And this is the thing which you need to know with respect to the RRB. Existing government banks doesn't fulfill or doesn't cater the rural banking. So the Narasimham committee recommended to introduce a different bank, that is the regional rural bank in 1975. And this regional rural bank ownership has been lying with 50% with the central government and 35% with the sponsoring bank, whichever bank is sponsoring, 35% ownership given to the sponsoring bank and remaining 15% given to the state government on which state it is going to operate. So thanks for being with me. I hope the concept of RRB is clear to you. Have a good